All right, topic A tonight. The epic stock rally paused today. The indexes retreated slightly, but there's some good news. Dell surging over 5% in after-hours trading. Companies are spending money to replace old computers. Retail sales came in light, maybe weather, maybe not, but inflation fear is becoming the major market theme. I'm going to get into that detail in just a second because import prices came in too strong, and so did prices paid and received in the New York Fed Manufacturing Index. So, is it an inflation tax on profits? We're going to get to all of this. But first, let's go straight to our market mavens. Joining me now is CNBC contributor Keith McCullough. He's the founder and CEO of Hedgeye Risk Management. Lee Munson, Chief Investment Officer, Portfolio Asset Management. Dave Goldman, former head of fixed income research at Bank of America. Keith, let me start with you. You've got manufacturing price increases, commodity price increases, import price increases. In fact, here's a data point. Import prices last 12 months, 5.3%. Foods, 15%. Industrial imports, 13%. Is that a tax on profits?
Definitely. I mean, if you look at corporate margins, obviously we're at all-time highs in corporate margins. But if you look at corporate margins actually in the fourth quarter, Larry, you're already starting to see a creep. Now, a lot of people talk about how revenues have been better in the S&P 500, but 25% of companies in the S&P 500 showed down margins in the fourth quarter. So to your point, if we continue to see inflation and cost of goods hold in the first quarter, that's going to continue to be a headwind for corporate margins.
Lee Munson, are we going to continue to see these inflationary headwinds?
You know, I don't think so. I think that we have tepid growth in the domestic economy. Now, if you want to talk about the emerging economies, I think it's going to hurt, certain multinationals that have big exposure there. But I think if you're looking at companies that, 50, 60, 70% of their profit is coming from here, then I don't think you have a problem. Unlike my lookalike Jim Carrey, I don't live in Hollywood and I don't do virtual portfolios. I got to put money at risk every day. And what I'm talking about is getting long, staying long. I took a counter trend short bet last week in my hedge fund on the S&P and I got burned. So I'd say the trend is your friend, stick with it, and I think as long as you keep America-centric, I don't think you're going to have a problem.
All right, America-centric. So, Dave Goldman, we got one yes for inflation, one no for inflation. Let me just ask you this. For this epic rally to continue, Dave Goldman, what do investors need to see to get us to the next leg? What do people want to see? What do they want to hear?
Investors have to see a clear idea of what Washington's doing. And I think the problem we have, difference between a pretty good market and a great market, is QE2 is backfiring, Larry. It's giving us inflation where we don't want it, which is import prices, and deflation where we don't want it, which is housing prices. How does that work? Fed's idea is we need more inflation. That's supposed to chase people out of cash into hard goods so the economy gets moving. The problem is it's chasing people out of the dollar. Yields go up. Commodity prices go up. Emerging markets overheat. So it is the tax on profits. And at the same time, we're seeing, with higher yields, the housing market crash again, which means consumer balance sheets are weakening. That's a drag on retail sales. Now, that said, I still like stocks. I still like miners, oils, high-cap industrials with a global presence. But I think as long as the government gets this part of it wrong, it's going to be a big headwind.
Lee Munson, what about the government getting part of it wrong? We're going to talk later in detail, but let me just lay this on the table. President Obama put out his budget. That is supposedly a statement of economic policy. In that budget were some very humongous, gargantuan, and otherwise very large tax increases on investors. Does that trouble you? Do you think about such things?
I do, because I don't like to pay tax, though my CPA says I pay enough. Here's what I'm concerned about. Where was, in any of that documentation, maybe I was asleep this morning, but where do we talk about entitlements? He's talking about Obama, this guy that I guess I voted for, is talking about cutting $400 billion in the next 10 years. We're spending $1 billion a day, Larry, over that. So I think the real thing that we have to talk about is not about tax increases for the rich or for corporations. I think the deeper meaning here is, when are we going to have a class war between public sector unions, the 99 weakers, and entitlements for senior citizens versus corporate America that's trying to increase profit margins? I think the one thing that we have going for us, what?
If I can add to that, remember the rally really began in earnest when Obama made a deal with the Republicans to keep the Bush tax cuts, and now he's turned around and trying to renege on that. Now that clearly puts the rally in danger.
That's a key point. Keith McCullough, we've got two things on the table. We've got QE2, and we've got hidden tax increases in the budget, which David Goldman says essentially reverses President Obama's pledge to hold down tax rates. Now, I just want to ask you, Keith, is any of this stuff having any impact at all on the stock market?
It hasn't yet, but it's having huge impact in global markets because global markets are obviously denominated primarily in U.S. dollars. 85% of foreign exchange transactions occur in U.S. dollars. So what you're seeing here is a gigantic American test of central planning. And in the face of that, emerging markets are getting tagged. U.S. treasuries are getting tagged because inflation's occurring in dollars. So my fear is going forward is that you have a central planner at the helm. You have a central planner at the helm also of the Federal Reserve supporting a weak dollar message, and going forward, obviously, that's going to continue to perpetuate inflation.
Yeah, but Keith,
there's no central message. There's no central message. We have central bankers for the first time in a couple years talking about not doing the same thing. We have Europe doing austerity programs. We have us doing the spend, except for what Obama wants to do with tax. And we have emerging central, bankers not doing everything. Yeah, a lot of things like oil and commodities prices.
What do you want them to do? What do you want them to do? This is the question that I'm asking tonight. We've got inflation on the table. We've got QE2 on the table. We've got tax hikes.
First of all, Lee Munson, and again, he doesn't have a lot of credo on this, but he's mixing monetary policy with fiscal policy. Spending has to do with fiscal policy. Monetary policy has to do with QE2. So what do you do, Larry? You stop QE2. You raise interest rates. This is what Sweden did today. This is what the Canadians have done. This is why these currencies are actually strong with credibility. So when you look forward, you can't mix these two things together.
I don't think I'm mixing any metaphors.
No,
I think you have the understanding there's a central puppet master, and there's not. The big risk this year is that we have central banks not acting in a central way like they have in the past 5 or 6 years.
Okay, so
we had central banks doing the same thing.
Central bank has to have a policy. If I may, if you ask the central bankers of the most successful emerging market economies what they'd like, they want the Fed funds rate at 2% because they want the torrent of unwanted dollars coming out of the U.S. to stop.
So you think, David Goldman, just to pursue this for a moment, I don't mean to be cut you up, but you think it would be bullish for stocks if our central banker, the Bernanke, a.k.a. Ben Bernanke, the Bernanke of Facebook fame, to raise the short-term interest rate. Is that what you're saying, David Goldman?
If it's combined with tax cuts. That's the old Reagan formulary. You were there and you did it. You have tax cuts and an anti-inflationary monetary policy. It has to be presented as a package so the market understands what the intention is. If you simply had a rate increase with no explanation, could spook the market temporarily. But the package is what's important.
Lee Munson, what about protests in Bahrain and actually Iran, too? What about that? Are we kind of ignoring that as a major factor here?
I am. I mean, a couple of weeks ago, Tunisia fell in 7 days, and American investors, they weren't looking at things like Egypt. Some of us were. A lot of us here tonight in front of the viewers were looking at short Egypt. But, the American public doesn't even look at Al Jazeera's English newsfeed. You can go on the internet and look at it, but even Al Jazeera was a little light on the Bahrain stuff, on the Iran stuff. I think American consumer needs to understand, the viewers out there, that we're not out of the woods yet. Just because we think something has happened in Egypt, I'm not here to say long, short Egypt. I'm here to say that, I would be short the stability in the Middle East. I've been talking about it on your show since early January, and that's why we continue to look at increased volatility in oil, being long energy. What David had to say, energy is still a big component to the S&P 500 here domestically.
Energy fell
I think
today.
The American public needs to look.
Energy fell today. ExxonMobil fell today.
I'm a buyer.
I'm
a buyer. I'm a buyer today.
Keith McCullough, are you a buyer about energy? Are you a buyer because of Bahrain? Are you a buyer because of Iran? We've learned now that these foreign events can have a major significant impact on the stock market. Where do you come out on this stuff? These things can grow. Who knows what's going on over there?
Yeah, we're a buyer of inflation. It's hilarious to watch Munson talk about how he doesn't see inflation, but he wants to be long energy. At the same time, we're asking, and again, Munson asked for this. He's asking for global central planning. America needs to plan centrally with the Europeans. I can't believe this is. I feel like I live in Russia.
I didn't say. No, I don't think that they should plan. I think they should do their own thing. You're saying that it's not a risk. You're saying everything's priced in dollar and there's no risk. I say it's not, a lot of things are priced in dollars because the one thing, which is oil, is priced in dollars. I don't think everybody should do the same thing. I think everybody should do their own thing so I can have volatility to make money off of. Real money, real profits for real clients.
Gentlemen, I have to leave it there. We've covered quite a few topics tonight. Keith McCullough, thank you very much. Lee Munson and David Goldman.